So about a week ago, I posted a real estate market update for the Central Coast, and now I want to highlight what's going on at the national level to give you a better idea of why we're seeing what we are here locally and just an overall big picture. So we're going to tackle two main topics, one being interest rates and will they keep rising, and then also what's happening with home prices. And I have to say, this is probably one of the most important monthly market reports that you could watch. And so I'm glad you're here. First of all, there's a lot going on in the housing market. It's a very pivotal time for both buyers and sellers. And that's because there's a lot of economic uncertainty around us. So I want to bring you some clarity today. I'm going to start by helping you answer the question, will mortgage rates keep rising? You know, it's a big part of the fear and uncertainty that people have right now in the housing market, because let's take a look at what we're seeing in the media. So we're seeing headlines like the US housing market stares down an even bigger economic shock. Mortgage rates near 7%. Mortgage rates reach highest level since 2008. 30-year fixed rate mortgage jumps over 7%. These are all headlines that are out in the media right now, and this is the reality of a rising mortgage rate environment. So what we can see here, this is the Freddie Mac 30-year fixed rate from January of the beginning of this year all the way through today, and it says that the mortgage rates rise for the 6th consecutive week. Those orange bars that you can see over on the right side of your screen, you can see how rates have been rising since the beginning of the year, and then look at the sharp incline that we've seen just over the past 6 weeks. So mortgage rates are rising very rapidly. Now, what you're seeing here is a look back. So this is saying that rates are at an average of 6.7%, and that's a look back. So what we also know is with mortgage rates rising like this, you may be seeing a number that's even higher than that today. So that's very much a reality. But what we can see over time, regardless, is that, you know, regardless of this week or next week, is the trend is in an upward direction. That's what's happening right now. So I want you to take a look at what Sam from Freddie Mac is saying about mortgage rates today. He says the uncertainty and volatility in the financial markets is heavily impacting mortgage rates. Our survey indicates that the range of weekly rate quotes for the 30-year fixed rate mortgage has more than doubled over the last year. So pretty steep increase and climbing quickly. And the big question that a lot of people have is, why are rates going up so rapidly? Well, let's take a look at what's happening with that. Let's take a look at a quote from Miss Odetta from First American, which she says, the aim of Fed tightening is to curtail demand in an effort to tame inflation. And when it comes to the housing market, the Fed's actions are working. So what the Federal Reserve is doing, we know they don't call mortgage rates. So the moves that the Fed is making to slow the economy is having an impact on mortgage rates. As inflation is high, mortgage rates tend to be high as well. And until inflation is down significantly, we see mortgage rates rise. So what does that do? That has an impact on the housing market, which is very intentional by the Federal Reserve. So Odetta, what she goes on to say is that home sales, both new and existing, are falling. Builders have cut back production in response to rapidly declining affordability. We know that this is easing off the demand, and an annual house price growth has slowed from the peak of nearly 21% in March of this year to 16.7% in July. So we're seeing this cooling or slowing of the housing market as a result of rising mortgage rates. This is the reality that buyers and sellers are facing right now, and this has been a trend even more rapidly over the last few weeks. So what everyone also wants to know is what's ahead. What are the experts saying will happen to mortgage rates moving forward? So let's talk about that for a moment. Well, even 2 months ago, rates above 7% may have seemed unthinkable at the current pace. We can expect rates to surpass that level in the next few months. This is a quote from Realtor.com. And really what he's saying is that even a couple of months ago, experts were projecting that mortgage rates would rise, but we weren't really even talking about 7%. So as we're starting to see that tick upward, this is all due to inflation. We've been saying that for a while now. We have to watch inflation to see where mortgage rates are going to respond. So I think this quote is pretty powerful. It's from realtor.com as well. It says, there's no doubt that the increasing mortgage rate will make home buying even more challenging. We're feeling that affordability pinch right now that is loud and clear, but buyers may still find opportunities as these changes coincide with the time of year when buyers historically found the best market conditions to obtain more bargaining power. So what does that mean? Well, with mortgage rates rising, it slowed down the pace of sales. At the same time, this has created more inventory or more options in the housing market. So buyers who may have been outbid more times than they can count, or they have been searching for that home for months and months and just could not find it or could not secure, they have more options right now. And the frenzy of the multiple offers is behind us. And so it's truly an opportunity for buyers, and something that I can discuss with you further if you're thinking of stepping into the market. So let's wrap this section up with a quote from Mark Fleming at First American, because I think it says it nicely. While mortgage rates are expected to continue to drift higher over the coming months, that's what we're seeing right now, much of the rapid increase is likely behind us. So that's not super specific, but it's good news, great news. While month over month house prices may decline, the annual house price declines are not expected. While month over month house prices may decline, annual house price declines are not expected, given the ongoing supply demand imbalance and continued strength in the labor market. So that opens up the other question: what's ahead for home prices? Well, let's take a look at this graph. The supply and demand ratio in real estate has changed very, very quickly. So we're looking at the measure of showings, which is demand. And then we've got active listings, which is supply. So let's back up for just a moment. The last couple of years during COVID, we saw a real estate market like we've never seen before. The meaning of home changed, interest rates dropped, and so many people said, now is the time that we're going to buy a home because we need something different. Or, the needs of the family has changed dramatically. So what happened? Showings on the left, that's the demand side. It went through the roof. So something, think along the lines of 20 showings a day, bidding wars, less than 24 hours on the market, things like that. It was absolutely nuts. So we've got the 30 showings a day, the bidding wars and all of that. It was a tremendous amount of demand that was out in the market. And what happened with listings? The listings dropped. So we've seen a sort of a record low amount of homes on the market at any one time, causing the bidding wars and the price escalations. So fast forward to now, and we've literally seen the inverse of that, which is what this graphic represents. Showings are down nationally right now, just over 12% in active listings, up over 27%. That has not been the story over the last couple of years. That's an inflection point in our business. So what are the experts predicting for the housing market? Please remember, this is nationally. Let's take a look at a few quotes. So Ivy Zelman, CEO of Zelman and Associates, projects U.S. house prices will fall 4% in 2023, and then another 5% decline in 2024. So that's one perspective. Let's look at another. George, a senior economist at Realtor.com, says, not surprisingly, deals are not getting done, with sales of new and existing homes declining for over half a year. Given that demand is cooling due to high borrowing costs, incomes falling behind inflation, and the still limited supply pipeline, it is becoming increasingly clear that prices have to decline to restore market liquidity and balance. Okay, so George is saying, hey, no doubt deals are slowing down and it's become clear that prices have to decline. So higher. Okay, so let's look at a third one, Mark Fleming from First American. While the market's considered overvalued, may need to adjust to the not so new reality of higher mortgage rates, housing market fundamentals still support a moderation of annual house price appreciation rather than a sharp decline. So we just talked about Ivy Zelman, and then Realtor.com. They're talking about the depreciation. We have Mark Fleming from First American saying moderation and price appreciation. So we're starting to see that experts say a number of different things. Some say depreciation, some say a marginal dip, or even appreciation. So we'll talk about that when we compare all of the projections here in just a second. There's just one more quote here from John Paulson, hedge. We're not at risk of a collapse today in the financial system like before. It's true, housing may be a little bit frothy. So housing prices may come down or they may be plateaued, but not to the extent it happened before, is what he's referring to, not the extent that it happened in 2008. So we have sort of this range of opinions from experts about the market. So if we start to take this picture, and this is really what I want to communicate to you today, is that what's the picture right now for the casting of prices. So home price forecasts for 2023, the latest forecast. So the average of all 6 is 1.8% appreciation. So got 5 here that are predicting an appreciation, and then we have Ivy Zelman and her projection of depreciation. All right, so let's look at the appreciation depreciation forecast. So first of all, what is an MSA? An MSA defined by the National Association of Realtors is a metro statistical area, an area with at least one urbanized area of 50,000 or more in population. A little bit more that goes into that definition, but just wanted to give you a general idea. So appreciation is projected in 618 MSAs. And 257 MSAs are forecasting depreciation. But most of that 257 in depreciation is less than 1%. So 1 to 3%, that's very marginal depreciation. Some in the 3 to 5% or higher than 5%. But the reason why, I think this is really important is that there are forecasters out there talking about depreciation, and then what happens is the news cycle gets a hold of it, and when it gets delivered to the public, everybody's thinking that everything's calling for depreciation, and that's not the case. Not everybody is, and it's definitely not every area of the country. So I think it's very important to have somebody in your area that you can go to for stats in your area or the area that you're wanting to move to or that you're interested in, because things, first of all, when we're looking at these stats, are very broad, and it varies, in this state, what we're seeing here on the Central Coast, and then you go 1 hour inland, it's a completely different market. So very important to consider your specific geographical area. So let's look at forecasts through, again, we can get more granular with this in our local area. So if you want some stats on what we're seeing here right now, I'm out there working with buyers and sellers every day. So I have a really good idea on what's happening out there, and it's changing very quickly. So a listing strategy that I would have a month ago would not be the same that I would right now, because it's changed that much. So reach out to me anytime with questions, and I will see you on the next one.